going back to the, GIP model framework, one of the things, sort of the great genius of our process was to, regress that model against various equity sectors, style factors, and various asset classes and factor exposures across global macro. And one of the things you learn is that, it makes sense. This is generally a coherent story being told across the performance and the relative performance of those factor exposures in each quadrant. And one of the things that really does well in quad one is biotech. High beta, momentum, growth. These are all things that lead the charge higher in quad one. So we like biotech. We certainly, obviously it screens bullishly from a quantitative perspective as well. So definitely is kind of fits that mold, and that's something we try to do. Certainly Keith tries to do that in the real-time alerts. Okay, we have a macro view. We know what sectors and style factors we like within the equity market. Now let's go out there and go grab our research team's best ideas. We have a very large research team. I mean, our research team is bigger than most of our clients' research team. With the maybe exception of the top, 10, 15, 20% of our clients. Certainly our hedge fund clients don't have research teams as large as our firm, or as large as firms as large as our research team. So we have a lot of seasoned analysts, like yourself, who do a lot of work on the bottom up side, fundamental side of the companies that can give us tickers that are poised to outperform even the style factors and sectors that we like. So that's been something that we've really added a tremendous amount of value to clients over the years doing.
Well, and on the flip side too, right? Healthcare usually performs better, right?
Yeah, everything. Look, so the simple answer is that everything goes up in quad one with the exception of utilities, at least historically speaking.
And I mean, and from our process perspective, I mean, it's something that we definitely have to be mindful of because in healthcare we're short a lot of healthcare, and it was great. Our great end of 2015 through 2016. I think healthcare is one of the, if not the only sector that was actually in the red. But year to date, it's been really, really painful. To be long anything, to be short anything.
Totally.
Really. I mean, and even for like some of our top ideas, where like a Cerner, for example, where you have fundamental confirmation, like management's taking down guidance, estimate revisions are negative, anecdotes suggest that the market is anything but robust, right? But the stock's up 20% year to date. It's just like, well, what do you do? And I think that's where the macro process can be really helpful to risk manage those types of scenarios. Right?
For sure. I mean, one of the things is not just sort of, you're absolutely right. It's not just picking sectors, style factors, factor exposures. It's also navigating your gross exposure and your net exposure in the context of what's likely to happen. If we're at the quad 3 or something, or quad 4, maybe you want to be more short, certain particular factor exposure. But if you're in quad 1, just being net short of the equity market is just simply not a good idea. And that's being net short of a whole equity sector, with the exception of maybe utilities, is just simply not a very good idea.
Okay.
And I'm not saying you guys are making a bad idea, because obviously your process is born out of the.
Well, I mean, the bottom up versus top down